Good morning. It's Tuesday, March 18th. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. We got new record highs in the gold market overnight. And if you haven't done so, we got new record highs in our subscribers to our YouTube channel. Help us hit that level that we're looking for, that 10,000 level as far as subscribers. I think we can hit it this week. Also, we did send out a chart pack yesterday, which we are building on here. So it's in the works here, and we're going to continue to add to it here. And we are also going to send out our chart of the day. Let us know if you didn't receive it. We identified a channel in the gold market in that chart pack with about 30.35 to 30.45 as our next upside target, which was achieved in the overnight session. Now, one question that I always receive from a lot of people out there, they'll call in and they'll ask me and they'll say, hey, what are your three strongest markets on technical strength? Forget everything else. What's three markets that are on your radar? And I really believe that the three strongest markets right now are gold, of course, feeder cattle number 2, and copper number 3. So let's get into Monday's action here and kind of rewind for a second here, because it's important to see what developed yesterday and where we're going today, because a lot of those markets also come on the radar. So you look at the performance leaders, you got sugar up about 4%. Now sugar futures climbed to the highest in almost 3 weeks, with some production estimates scaled back by the world's largest growers like Brazil and India. So they talked about less production over in India, and they really curbed their exports here. They set a high quota, but now is the question, can they keep up with that quota? So the sugar production and a global sugar supply might tighten up a bit. Another performance leader was the wheat market, up about 2%, and it touched its highest level of the month. With bad weather down in a major exporter, it sparked some concerns here about the potential for global supplies. Now, two of the laggers here was the volatility index, coming off about 3.5%. That's why it's important when you look at shorting these markets. It's okay to short markets. It doesn't matter what market is. It's just very difficult to stay short for an extended period of time, especially when you see volatility come out of those markets. And that's where there was a lot of discussion about the S&P 500 perhaps bottoming out on yesterday's action. Now, another market here that we're looking at is that natural gas market. That's one that a lot of people took a technical short on, with that spinning top that we saw on the markets here. And we saw a topping formation on natural gas. A lot of people shorted the micro natural gas, stops over the contract high, and we've seen a nice breakdown. And that's a market that we've identified a few times where we took that. Now, what people ask me also are, what are some of the system buys that I'm getting, or some of the markets that, and this is really just for informational purposes only, like what market yesterday made a move that stood out. There was really a couple of them out there. One of them was the platinum market here. It was the latest market that kind of triggered out a breakout on the long side here on a longer time frame. Now, something we're going to watch though is that a lot of times these markets, when they do break out, what you'll want to do is you'll want to monitor what was the price action on the day of the breakout, because if there's a rejection on that breakout price, well then perhaps it's a false signal here. So we'll want to keep an eye on the platinum market. Make sure that thing doesn't go negative, because it is negative on the day right now after reaching 1036.30, and we're at 1025.30, down $1 on the day. So we'll want to keep an eye on that market as well. Now, Monday, some market and some data standouts. One thing we had, gold closed over $3,000, and that's something that I was really looking at for building on some of the strength of that market. We also had U.S. retail sales come in much weaker than expected, and we had the Empire manufacturing come in weaker expected too. That retail sales figure was 0.2% versus 0.6%, and the New York manufacturing fell off a cliff at -20 versus -1.9. So really, you see that data weaken quite a bit, and what happens is traders are looking for places to store their money at here and looking for a little bit of safety here because of the concerns about the U.S. economy. Now, today we're going to get some more data coming out. We'll have U.S. housing starts, we'll have import price index, we'll also have industrial production. I'm going to be watching the industrial production, how the price action goes in U.S. equities, how the precious metals respond with these where we're starting to get to some of these loftier levels in the metals markets. And then also tomorrow's FOMC. Now, everyone with tomorrow, this is where we're going to start bringing that FOMC watch tool. Remember the Fed watch tool we were monitoring so closely over the last couple of years, and we kind of shelved it once that December meeting occurred where Jerome Powell said he was just on the fence about cutting rates and he didn't necessarily have to do it. Well, what happened was gold futures had a massive sell-off here. So a lot of people are expecting him to have a dovish pause tomorrow, meaning that he's going to come out and he's going to say, yeah, we're monitoring the economy. Yes, we're monitoring weakness. Yes, inflation data has come down recently. Remember this, they got a favorable CPI data, they got a favorable PPI data, and that we would look to start cutting rates here sometime soon. Now, we're not anticipating this meeting, perhaps the May, perhaps the June, and that's where 3 interest rate cuts have come back onto the table in 2025, and that's helped boost your gold market and take down your dollar index. Now, copper futures were one of the markets here yesterday that really led the charge. It got a few different fundamental stories, a breakout on the charts. It's testing a key psychological level of $5. Above that, your next resistance is going to be about $5.15 to $5.18. It had things like strikes going on. There was a militant strike on a copper and gold mine down somewhere in South America. There's a problem with the cobalt market and exports there where they can interchange it with the copper market. And we're still seeing a lot of end users in the United States trying to grab onto things like steel, things like aluminum, things like copper here. So we're going to want to keep an eye on that. Now, gold futures, they did rise to a record high. Couple thing to note, Middle East tensions starting to come back here. And again, the concerns about the slowing economy. So the metal's up about 15% year to date. This is the strongest advance, obviously, since 2024. And one thing to note, several of these banks that had these $3,000 targets are now raising those targets here again. I've seen $3,500 being floated out there by a couple major banks. So the inflows in the physical backed exchange traded funds, those also rose for the 5th day. So one thing we do, we always look at those ETF flows from the previous trading session, and exchange traded funds added 209,000 troy ounces of gold for their holdings in that last trading session, bringing this year's net purchases to 4.09 million ounces. 5th straight day of growth. What's important is that now we're butting in on 5% growth year to date. It means that people are really starting to add some gold to the table here. Are they late to the party? Technically, I don't like adding to the gold market right up here because of the fact we're against a key trend line here. And if you got, again, that chart pack, we'll also make it one of the charts of the day here that we'll send out. And we'll show that we might run into some formidable resistance at these levels. Now, here's something to note because I know many of you guys are silver bulls out there, guys and girls. So silver futures, they added 4.3 million ounces to their holdings in the last trading session, bringing this year's net sales to 5.48 million ounces. So silver, still lower on the year as far as ETF flows, but closing in on the unchanged level. So it added about 0.5% yesterday. We're at minus 0.8%, but the big inflows there. So silver from the short standpoint, not liking that too much anymore here because of the fact we had that empty candle, we had a lower candle, but how did we close on the session yesterday? That's why you got to check in, and a lot of the data that I look at, a lot of the algorithmic data, a lot of the trading systems that I use, they all use end of the day data. So they're going to use what happens at 4 p.m. when the futures markets close. And regardless of what market is, that's where it can compute and it can crunch the numbers here without any false signals or volatility out there in those markets. And it was silver closing near the top that gave you kind of the setup with $3,000 gold and then also the copper futures closing in on $5 for it to get this big boost in the overnight session. So you have silver futures up 46 cents, trading at 34.76, just off the highs of the session. Gold futures up $27 at 30.33 last, and that's the April contract. We're not going to be quoting the April contract too much further, we're going to shift out to that June contract here pretty close. Again, copper futures 499.85, and you got the gold silver ratio sitting at about 87 to 1. So they are moving kind of in lockstep together. We're not getting this big boost and this big float into the silver market yet, in my opinion, here. So looking at a couple other things. A story that I'm watching, and it's a story I was reading last night, because a lot of the reading I do, it goes at night, it comes in the morning, and that's where I get the content for this channel, was that the global silver market faces some strains here, and it's due to the trade war concerns, the high leasing rates, and it's adding signs that there's a global dislocation going on in the silver market. So we're seeing this surge in the lease rates for silver, and it sparked this dash to ship the metal across to the US. Silver's way too cumbersome. Unless you have some kind of military type aircraft, you're not going to be able to fly a whole ton of silver across the pond and into the US. It's got to come via cargo ship because of the weight. So the tariff concerns, they've drawn on vast quantities of silver out of the London and into the US vaults here, with leasing rates jumping and stockpiles in the UK hitting a record low last month. That's why I believe, and I know a lot of people are going to disagree with this, I am a guy about efficiency of getting into a market, efficiency of getting out of the market, and owning the right asset class. And the warrant, so when you buy the 1,000-ounce contract or the 5,000 ounce on a silver market, and you go through the delivery process, and I'm not saying prepare a loadout, you don't want to remove it, you keep it within the exchange, but what happens is the contract, you pay for the contract to be voided, and now you own the silver in your name, with your serial number, with your bar at the exchange, and it's known as a warrant. At that point in time, if you get this physical squeeze on, say, the very front month silver past first notice date, well then guess what? You can offset this asset class in an extremely liquid manner here, and it is the physical that you're owning because of the fact that you have the bars in your name and you are paying the storage fees for that. So that's getting into it, and if you want to discuss that more, how to take advantage of warrants and things like that, you can always reach out to me. Send us an email. I'd be happy to discuss. Now, some key levels of support and resistance today. So looking at the gold market, and this is going back to the April contract because many people are in it. It's at 30.33 last. We're about $4 off the high. So we're getting right in on near that resistance point, the 30.35 to 30.45. I'm going to want to key and monitor that, see if we get a rejection up at that top end. Perhaps we get a little bit of a blow off top on this market over 30.50. Your critical level of support, your pivot number is going to be about 3,002, so much lower from here. So we'll see if it does string some profit taken on the market running into this resistance. Your support one, 29.94. Support two is going to be 29.85 to 29.75. Getting into the silver market, we are opening up over the pivot, and this is the May contract here. The last on the futures is going to be 34.77. Your pivot points down at 34.23. Below that's going to be 34.02 and 33.73. Your resistance 34.83, which we came right up to, and then above that's going to be 35.02 and 35.24. Now, something to note on the energy markets, because there's a lot going on in these particular markets. Crude oil futures, one of the best looking charts that I've got out there, and the reason is that you've got a breakout from a recent consolidation. You've got it drifting higher here in the overnight session and over the last three sessions with higher lows on the charts. You get the breakout to the upside. You've got an easy stop loss placement and not a formal recommendation. This is just identifying on the charts. We're $65 on the May contract. We haven't been much lower than that. You've got DMI plus crossing over DMI minus, which is always a great sign, meaning that there is a shift of regime going on buyers versus sellers. You've got stochastics rising from oversold territory, but not into overbought territory yet, kind of in the middle of the range, but turning up aggressively, meaning that it looks like that market has some room to run. And finally, you got the MACD positive on the crude oil market, meaning that a lot of people that use systems, that's one of the things that determines whether or not the system is going to go go long or the system is going to take a short signal is based upon how that MACD is positioned. So you got rising Middle East tensions for the third straight day. Those concerns about the global supply glut, they're starting to come down a bit. And you've got an increase on Israel's military strikes in Gaza, U.S. pressure in Iran, and a pickup in geopolitical risk. So we are up about 5% from the low that we saw earlier in the month here. And many of you are looking at that June contract. So lots to unpack here on today's video, but I thought that I got really excited when I saw where the metals were at, where I saw a lot of these stories were going, things like sugar, wheat, crude oil, silver, copper, everything. A lot of great places here in the commodities markets today. You got any questions on futures commodities trading, give us a call. And remember that futures and option trading does involve risk of loss. It may not be suitable to all investors. Good luck and good trading.